Just wanted to ask you, with quantitative easing and devaluation of the dollar, you mentioned a little earlier about purchasing assets. What's your view on precious metals, physical gold, silver?
Another great question. And again, thank you for asking it. I mean, for us, gold plays a role in a portfolio, in a diversified portfolio, as an insurance policy. You know, one of the things I would say, you know, it's typically viewed as a hedge against inflation, but the key variable is real interest rates. And I'll give you an example of why that's so important. In a normalized world, if a T-bill paid you 3% and inflation were 2%, you're getting a real return of 1%. And if inflation were to move higher, you would continue to benefit from the repricing of that. Because real interest rates are negative, you know, gold is a better investment. And only if interest rates, and this is what happened in the early 80s when Paul Volcker tried to crush inflation, and they raised rates above the inflation rate, that's when gold ran into trouble. But as long as you have real interest rates at a negative level, I think you have to own some gold, because you know what's happening is the government is reducing the purchasing power of your dollar, and gold is a hedge against that. Now, it's been a terrible investment in the market right now, and I think one of the concerns and one of the reasons for that is that with a stronger economy, interest rates start to move up, but so might inflation, and so real rates haven't actually declined; they're still negative. If that were to happen, or I think the other thing I would look for is if you have some kind of grand bargain in the U.S. that addresses their entitlement spending issues, if that were to happen, we might be less positive on gold, but at these levels, we still like gold.